Gold prices hit an all-time high of $5,600 an ounce in January 2026. After a bit of pullback, levels close to $5,000 and above were maintained given the West Asia conflict backdrop. The Iran war is only escalating. But the question is, why is gold now falling? Has it lost its sheen after a 65% rally in 2025? Let's understand all of these phases. Phase 1 was the initial jump or the fear factor when the conflict between the US, Israel and Iran escalated on February 28th. Gold prices surged to record highs nearing that $5,600 per ounce level. The safe haven effect came into play. Now, in times of war, people get nervous about stocks and paper money. They rush to buy gold because it is a physical asset that holds value no matter what happens to a government or a bank. So, the panic buying or the sudden rush of demand from both regular people and big investors pushed prices up very quickly. The Iran war has now entered its fourth week. As of late March, gold prices have dropped sharply, over 10% in a single week. In fact, the bullion endured its worst weekly performance in over 40 years. Prices have fallen towards that $4,300 to $4,500 range. This happened because of three main factors that cancelled out the fear of war. First is the oil inflation trap. Now, the conflict caused crude oil prices to spike above $110 per barrel. High oil prices make everything more expensive, meaning inflation. Now, when inflation stays high, the US Federal Reserve refuses to lower interest rates. In fact, markets are pricing in a 12% probability that the Federal Reserve will raise its benchmark interest rate this year. That's up from 0% the previous week, according to the CME FedWatch tool. Now, why does this hurt gold? Because gold doesn't pay interest. If one can earn some interest by keeping money in a bank or a government bond, gold starts to look a slightly boring investment. People often sell their gold to buy those interest-bearing bonds instead. The second reason for the fall is the US dollar appeal. In a global crisis, people don't just run for gold. They also run to the US dollar. The dollar has become very strong recently. Because gold is priced in dollars, globally, a strong dollar makes gold much more expensive for people to buy in other countries like India or Europe. Now, when it becomes too expensive, global demand drops and the prices fall. And the third reason is profit booking. Gold already had been rising for months before the war started. Many investors saw the price hit an all-time high and decided that they've made enough money and maybe they should sell before it drops. The mass selling created a downward spiral. Some investors even had to sell their gold just to get quick cash to cover the losses they were making in the crashing stock market. That is the curious case of gold. The safe haven rush which drove prices higher, and then the oil inflation trap, US dollar appeal and profit booking after a surge in 2025. The question now is, how much more can gold prices fall? Experts WION spoke to suggest that this correction was long due. Now, against the Iran war and Fed's current stance, they say that prices could be in the range of $3,800 to $4,000 per ounce in the near term, that is, say in a month's time. In India too, the picture is similar. Manav Modi of Motilal Oswal believes that prices could drop to 1.15 to 1.20 lakh rupees in the near term. He doesn't recommend buying fresh right now. And if one has a 1 year or longer term view, they could accumulate gold on dips. That's the word coming from him. Well, that's about the gold impact on your pocket, and WION decodes complex issues in simple terms. What do you want us to decode next? Let us know in the comments below.